right, this is the weekly coffee video for the week of Monday, July 15th, and it still reflects the September 2019 contract. Let's take a look at the chart actually, I'll show you the newsletter itself that you've probably already opened, but it'll help. We'll bump it up a bit. You can see we came close to testing 116.65 over the last couple of weeks. There's a equally significant long-term channel top. I'll show you in a moment now at 113.45. And last week I think I had it as a session containment level. I bumped up to its rightful strength at 113.45. So really what we have here is a range of long-term resistance that begins at 113.45 and ends at 116.65 that can absorb buying into September contract expiration. And in fact, regarding the broader coffee complex through the balance of the year, our next downward pivot point is 104.55. And so 104.55 is likely this week. We're very close to it. It can contain weekly selling pressures, and in fact, once tested, we could over the following week or two push back up into that 113.45 to 116.65 region, which is a much more significant area. In fact, holding below 113.45 does, I'm going to say, allow, at the very least, it's a soft way of putting it, but I think you should prepare for bearish continuation. Let me show you here what I've got, because it's not on the chart itself. This is a big picture here. So there's 104.55 that you see on the chart, on the newsletter itself. If we close the week below it, the market is set off, well, it's actually indicated a good high through the balance of summer trade and into September expiration. And in fact, overall, holding below that 113, let's go back to it, holding below this 113.45 to 116.65 region does allow bearish rotation, bearish continuation now that we've settled lower on the week, down into the 84.95 region over the next several months. And in fact, if we close this week, Friday, below 104.55, you could make a case that we could actually reach 84.95 by the end of August. 84.95 likely to contain monthly selling pressures, possibly quarterly selling pressures if or when tested. And overall, big picture, we could actually continue south into the 68 handle. I don't know about within this year or not. That would be a pretty significant sell-off. But certainly, let's just say over the next 5 to 8 months, the 68 handle is in reach. Because let me show you the significance of this overhead resistance area. 130, I'm sorry, that's wrong. That's wrong. Hold on. Let's see here. There it is. There's the 113.45 level. Let me go back to the newsletter itself, 113.45, and then it's backed up by this 116.65 nearer term formation, so that once again this is our range of resistance, and you can see that this is a much more significant longer term structure. 113.45 holding below it does allow that we'll call it the low to mid 80s over the next 3 to 5 months, and in fact the upper 60s over the next 5 to 8 months. But if we close not only above 113.45, but really we would need, in my opinion, to close above 116.65 this week. And it is potentially a reality, although that would be a significant rally at this point in time. But if on Friday, the end of the week, we closed above 116.65, that would maintain a decidedly bullish dynamic into later year. 125.50 then expected within several weeks. And in fact, the next several months should actually yield 132.05, where we can top out through the balance of the year. And let me back up one more time. That buy signal above 116.45 that I mentioned a moment ago, yes, it would involve 132.05 within several months, but there is the possibility, as I mentioned in last week's video, that we could continue on into the 156.90 region. The timing of that would be difficult. It depends on how the market behaves at 132.05. That 132.05 level is certainly a quarterly containment point. But let's just say into the spring of next year, we could certainly reach into the 156.90 region if we close this week above 116.45. But to summarize, holding below the 113.45 to 116.65 region, now that we've tested it, now that we've sold off, now that we've placed a lower settlement on the week, we've closed below the preceding week's low, This is setting up for bearish rotation into later summer, into fall, into later year. Our next downward pivot point. So if we're not short right now, you should be if we close the week below 104.55, because that likely marks a good summer high, if not a good annual high. And that is really all that needs to be said for the week of Monday, July 15, September coffee.